So we're starting the 5th week of the Iran war. It is also the last trading days of Q1 as we transition into Q2 2026. And what I want to look at is the weekly chart of broad market futures. We're going to use the NASDAQ as our example here and give you some tips about how to sort of gather what is going on and get perspective when things seem like they're crazy and out of control. And as always, we'll be looking at price action, market timing, and momentum because I'm HEMA ready and that's what I do. So first, what I have up here is the NASDAQ current contract. So when you look at a higher time frame chart like weekly, you can still plot the current contract. But what I want to advise that you do so that you have perspective, especially because in index futures, the contracts shift every 3 months, is look at the continuous contract. So on TradeStation, all that means is taking the @ symbol and putting in NQ, and now I have the continuous contract. So what this means is I have more history. See, I can go way, way, way back. Now, once you do that, I would like you to squish up the data. So I want you to look at a lot more data. And I actually talk about how much you should look at on your charts as a general guideline in my winning price action playbook. Right now, I'm just kind of going to use my experience and my spidey senses, if you will, and squish back to see how far I want to look back. Now, this may seem a little crazy, but I kind of want to go back to the pandemic. So I am squishing up on this chart. Yes, this is a continuous chart, and every candle represents 1 week of action. So you can see back here, March of 2020 was the pandemic low. I've just marked it in yellow. And then we had the November 2021 high. So this just gives you perspective of where things have been unfolding. Then after that, so I'm just going to move these 2 lines. We had a low in October of 2022, then a high in December of 2024, then another very severe low in April of 2025, which was around the tariff announcements. And then we had a high that sort of formed gradually in October of 2025. Do you see how I did that? Do you see how I took those yellow lines and instead of marking every single individual things out of the gate, I went one after the other? This is marking extreme highs and lows, and this is critical if you want to really apply really useful Gann pattern analysis. And I talk about that in my Gann trading pattern system. In fact, I teach you how to take these extreme highs and lows and put them into a calculator that I made. We're not going to worry about the calculator right now. I'm just showing you how you can take the weekly chart to kind of get a sense of what's going on, to ground yourself, and then get into the details of the daily and intraday timeframes. Okay. So first we moved to a continuous chart. Now we have moved in that continuous chart at the extreme peaks and troughs, right? Or highs and lows, looking at them. Guess what? Now that we did that, we have perspective. We can just focus in on everything that's happened between the most recent important low and the most recent important high. Once you do that, it stops feeling a little or so crazy, right? It feels like a little more controlled and, oh, even though weird things are happening, the market's following a rhythm. Now, here's what's important. When you're looking at where you are retracing, so we're coming off of a high and pulling back in a move, right? You gotta look at where the midpoint is. So that's the 50% retracement of the move. Now, this is a continuous contract chart. So you wouldn't necessarily be trading on this. You would want to trade the actual contract, the June contract, September, whatever the front month is. But at least now I have perspective on the history, and having done it on the continuous chart, it's going to make it easier for me to translate on the contract chart if I need it. Now, the last thing here to remember is that projected levels like this 50% retracement are super useful, but they don't supersede the importance of past traded price action. So if we look even more focused, okay, I'm just zooming in, we can see that 50% retracement at 22,124.13 is up ahead. So if you were monitoring the continuous chart, you'd want to keep an eye on that level. You could also translate it by recreating that on your contract chart. But check this out. There is an actual traded level here, June of 2025, that is providing support. And that's the level that I really want to look at as the hard fact, right? That's previous traded action, not just a projection. The best part, in this case, they're both coming together at the same place. So I'm just going to bring that label back and put it over on the left side so that they're not conflicting. And now you can see this is how you can start to kind of map out where things may be headed and be ready for it. So the approach you want to take is to always look at support ahead if the market's dropping, fine, but always also look at potential resistance. Now, in a weekly chart like this, you're going to have two important areas. You're going to have last week's high. Listen, it's not that big a deal if last week's high isn't also a really cool high in the daily chart. It's still the high of an entire trading week. So out of the gate, that can be resistance to monitor. And then in the case of this down move, we want to look at not only last week's high, but the high that's shaping the down move. So if the down move is off of this October 2025 high, then it's this February doji high that's shaping the move. See? It's not so scary when you zoom out. Now, this works whether you are a day trader, a swing trader, a scalper, a position trader, because it never hurts to know what the bigger picture levels are, because whether you're trading in a really low time frame or a higher time frame, the market knows that that history is there, okay? What you wouldn't do is do this type of analysis and say a 1 minute chart and then take those levels up to a daily or weekly chart and think that they're just as important. That is not the case. Now, like I said, you can take this and translate this to a contract chart. I am not an NQ futures trader, so I'll leave that as homework for you to get practice in. And I recommend that you take this approach, especially during times of change, right? Moving from 1 month to the next, 1 quarter to the next, or times of volatility. So if you found value in this video, in the method to kind of get yourself grounded, get perspective, and hey, even the NQ levels themselves, go ahead and hit that like button, and I'll catch you in our next video.